Yes, indeed.
Hello, my people. This is Howie, and I have another couple days worth of data that I've collected. So I'd like to sort of go over it. And I've actually created one sort of hypothesis situation that I'd like to review with you all. So we now have 8 days where we have at least the first number as far as the biggest winners of the day. Again, just to go over again the basics, I'm trying to avoid, this is kind of an outlier, but I'm trying to avoid stocks like under $10 or too much below $10, like nothing that's like $3, $4, $5, anywhere in there. So I'm just looking at the biggest winners on the TSX and then how they do days after the big event of being in the profit. So I now have, let's see, 1, 2, 3, 4, 5, 6, 7, 8 full days on the top line, and then it'll obviously go 7, 6, 5, 4, 3, 2. And what I've noticed, this is interesting, obviously the day after a big move on the upside is almost always followed by a big move on the downside. So you can see 11 wins and 29 losses after they were the big winners. So this is just people taking profits, and I think it's very common after a big upswing of any stock. But what's interesting about this is overall, these stocks the next day are still profitable by 0.33%. So you can see even though there was only 27% of the stocks were winners the next day, it's not like they got completely smashed. And there's some big second day profits like this stock, for example, that was up 6% and then concurrently the next day was up 7%. This stock was up 6% and the next day was up 15%. So even though on average they're definitely down, you can see the ratio overall is pretty close to break even. And then the following day we have a 12 and 13, about 50%, and a loss of 0.65. But again, I think I just need more numbers in a lot of these areas because there's usually one or two significant outliers. So if you just sort of scan yourself through the percentage won or lost for these days, you can see a massive 6% upswing on this guy, a massive 11% downswing on this guy. So there's a few that are sort of really outstandingly big moves, but you sort of have to just get an overall picture. And then the third day after close, we have 13 and 8, so 61% winners. Again, 0.37 in the profit on average. The fourth day after close, again, the data is getting a little bit less. We now are down to like say 15 stocks. We're 4 and 14, so that's 18 stocks. Very low winning percentage, but still a profitable day on average. Again, because we have some outliers of 15% here, 8% here. Even though there's a massive loser here of 11%. On average, it's 0.48%. The following day, which is 5 days after the big move, again, we don't have that much data, only 15 numbers so far, but you can see 7 and 8 wins and losses, and then a 0.5% increase. And then these sort of last 2 days are tough because there's again not that much data, but we have a 9 and 3 and a 4 and 2 on days 6 and 7, and again average profit of 4% and 0.25%. So these numbers are going to obviously level out a bit as I get more data. But I thought it'd be interesting. So I did a hypothetical. So I pulled essentially the first 2 sets of days that I have the most data of, and I think I took the first 5 days. I'll verify that in a moment. But just to see a hypothetical game, let's see, 1, 2, 3, 4, 5. So I ended on 8, 11 for that one. So 8, 11. So I did take the next 6 days. So we have the day that there's a big move, and then 1, 2, 3, 4, 5, 6 days after. And I pulled it into another tab. And what I did with this was I took all this data. This is basically the close each day. And I ran through a few hypothetical scenarios. The first being investing approximately $10,000 per stock at the close of the second day. So this is essentially the stock has a big move on the upside, and right at end of day, the day after, that's when you get into the stock. So using those numbers, these are my purchase prices for the stocks, how many shares I purchased. And then I created a hypothetical stop loss of 2.5% and a sell point of 5%. And then I just ran the data. I basically took, say the first one, entered at 792 with a stop loss of 772 and a sell point of 832. And then I looked at each day. So this is our entry point. Do we get stopped out here? No. 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 So in this particular example, we would still own this stock. It hasn't reached 832 to sell yet, and we haven't been stopped out. And then I'll continue on to the second stock. This stock we got stopped out at the 24.48, so that would have been a loser of $252. This third stock, which is MFI, we would still be in because, again, it hasn't reached our stop loss and it hasn't reached our sell point. And then so on and so forth. So you can see in the first scenario of a 2.5% stop loss, a sell at 5%, we are currently basically at 1 win and, well, that doesn't make sense. 1, 2, 3. Okay, sorry. I'm not looking at the whole range. So we're looking at 1 win, 2 win, 3 wins. And obviously the wins are going to be about 2 times the losers just due to the stop loss difference. So 3 wins and 1, 2, 3, 4, 5 losses. And that will give us a net profit of $221, which isn't too significant. That works out to about 0.17% on the week. And then over a full year, that would be about 9.5%. So again, not terrible. Make 10% on your money. But it's not super exciting, rock star, gonna sort of retire and make $1 million. So what I did on this second part was I implemented the current price of these stocks for the ones I grayed out are the ones that we actually haven't hit the win or loss. But just sort of imagine if I purchased them and exactly 5 days later, if I wasn't stopped out, I just sell them all. And you can see, so there's, 1, 2, there's 3 out of 4 of them are up for the week, just not enough to hit our sell point. So with these numbers, that's a little bit more exciting. Now we're looking at $844 in profit, which would be about 0.67%. The initial cost for these stocks, just to give you a reference point, is about $125,000. That's how much we would have invested in these stocks to purchase $10,000 per share. And this works out to 36% annually, which is a decent return. $840 a week would be that number. And now I switched it up because I wanted to look to see, okay, I was stopped out of 1, 2, 3, 4, 5 out of the 8 stocks. If I change it from a stop loss at 2.5% to a stop loss at 5%, so I know the adage is, cut your losses early and you want to have a stop loss that's less than your sell point. But I thought I would run some numbers just for fun. And here's what I got down here. So this is the same scenario, the same stocks. The only difference is I set my stop loss at 5% and my sell at 5%. So the wins are not going to be, well, actually what's interesting is the wins change. So we're now 1, 2, 3, 4, 5, and 2 on this scenario. So a few of the losers up here, we didn't get stopped out and they rebounded to get to our sell point. So of the 1, 2, 3, 4, 5 losers that we had in the first scenario, 3 of them switched over to, if not a win, at least we still own them. So in this scenario, again, this is just a small bit of data, so I'm not taking too much from this. However, in this scenario, our net profit is $1,453 currently. And then moving over here, if we were to sell all of our stocks at current value, it leaves us with $1,527 of net profit. I guess that's gross profit because this is not accounting for any sort of fees for buying and selling. So with this second case scenario, it looks at our profit for the week of 1.16%, which would be 63% over a year. And then with this second scenario, which is pretty much the most accurate, 1.22% for the week and 66.2 9% over a year. So again, this is just 12 stocks. It's just 1 week essentially. And I mean, for this to work, everything would have to be perfect. You'd have to get into the stock exactly at the end of day, because I don't know if there's any gaps. If we didn't get into the start of this day, if there'd be some gaps happening. And the other thing is, day 2 was fairly good for these stocks. If you come back over here and you look at day 2 for some of these other stocks, okay, this one we definitely would get stopped out of. This stock didn't have a great day 2. This stock was down another 3.5%. This stock was down another 2.8%. This stock was down another 3.1%. So again, I need to get these numbers filled in here and here and all the way down to, get this data filled in so I can have a larger number of stocks to be able to analyze. I mean, ideally 25 plus, I think. If I can get 25 stocks analyzed, maybe 30, and I can be comfortable, okay, now we can see a trend here. Now I can see a pattern. It's something that I can sort of start going with. And also messing around, like, what does this look like if I have a stop loss at 3.5%, say, or a sell point at 7%? What if I have a sell point at 10%? Let them run on for 20, 30 days and sort of mess around with some more hypotheticals. But that's where I'm at now. I hope you've enjoyed these videos, and I look forward to continuing on this journey and trying to figure some stuff out.
Yes, indeed.